Fausto Pugliese, president of Cyber Trading University.
Most people always focus on the past, where as a professional day trader, we just focus on the future. You can do very well in trading, and you don't have to have a good amount of movement for the stock to go up.
Welcome, everybody. It's Fausto Pugliese from Cyber Trading University, and welcome back for a new show. Today, I'm really excited. We have a special guest today, someone who's been shaking up things in the financial market, in the education, and the media. He's the founder of Wolf Financial, fast-growing platform, delivers daily financial education to millions of traders across the world, with talking about stocks, real estate, crypto. You said it. What was very intriguing to know a little bit more about Gab is, which I'm always a big fan of. When I started, he worked over at Goldman Sachs. I'd love to hear his feedback on it. Also started working on an equity firm. And then he turned his experience into a little bit more of a mission drive brand focused on the financial markets, access and engaging with other people and everything else. So we're really looking forward to kind of hear what he's done in the financial and social media network, because he built probably one of the largest ones that I've seen in a long time that communicate with people. So Gab, listen, welcome to the Cyber Traders podcast. How's it going over there?
Thanks, Fausto. Going well over here. I'm calling in from sunny Puerto Rico, just looking out over the Atlantic right now. Not too shabby a start to the day.
Look at you down in Puerto Rico, and I'm over here, starting to freeze over here in New York. I'm stuck in the New York area, trading mind and everything else. So what made you go to Puerto Rico?
Puerto Rico had a lot of attractiveness for me. I also grew up in the Northeast and lived there for pretty much my whole life, but I got pretty tired of the winters, pretty tired of some of the boringness that I found, especially in Baltimore, which is where I was living. It's not quite as exciting as New York. And I was looking for somewhere warm to go. And then, of course, paired that up with some of the amazing tax benefits that people should look into.
I knew you were going to say that.
And, yeah, I knew that was together.
It's all about the taxes, right? When you can. And you know what? You're just an entrepreneur like us all, and why not, right? Why that's fine.
I mean, imagine someone like yourself, right? If you didn't have any capital gains taxes, short-term or long-term, it's pretty crazy.
Don't tell me that. My wife's driving me nuts already. The only reason I'm stuck here is because I still have one more kid in school, and when I'm done, I'll be one of those down in Florida. Puerto Rico, I heard, is the best, though. I heard that is obviously the best. You speak Spanish?
Un poco.
Ah, all right. There you go. Parla Italiano too? No, just Spanish.
Yeah, my Spanish is a lot better than my Italiano.
There you go. So anyway, so Gab, let me talk to you. Let me ask you some questions. So how did you get into this business? Like, when did you start it? Like, I'm a big fan of Goldman Sachs. I tell everyone that Goldman Sachs is like the godfather of Wall Street. It's very hard to get a job. Whenever I get someone that always gives me a hard time, about dealing with a broker and this and that, I say, here, I give them Goldman Sachs phone number, and they find out they want like $5-10 million open an account, because some people just, whatever. You want the best, go ahead. They're the best, and there's a reason why. So I know it's a very hard job to get. I know a lot of people that work at Goldman Sachs in my town and stuff like that. And then obviously, I want to talk about how you learn and going from there. But how long were you there for?
I was there for a pretty short period of time. I was there for only about several months and then moved into that private equity space. I think for me, with Goldman, there's so many different branches, right? And there's exciting branches. And I was in private wealth, which to me was a great opportunity, but not really what I wanted to do long-term, if that makes sense. I think that it was great to get in the door, and I was very people-facing. I was picking up the phone and speaking with billionaires on a daily basis, talking with them about how their portfolios were allocated. But what I wasn't doing was really research, right? And some of these other pieces that I think I wanted to dig a little further into, and had a bigger opportunity to do so in the private equity space. And then, of course, everything rolled into what's happening now in the social media world, which ultimately became my true passion, but I didn't even know it at the time. I just knew that it wasn't the thing that I wanted to do for long term, but it was something that I learned a lot from. And of course, you get to be around all these incredible mentors. You just absorb that information.
What was the greatest thing that you learned working there? I mean, like, it's being at Goldman Sachs and working, like in the wealth. Because to me, like, I had some friends, because I don't know if this is, I mean, it's just how I think they make most of their money is their trading department, and that, because basically they're big traders, they had these desks and stuff. But what was like, because whenever I I'm in the edge teaching people how to trade, and we all know who our mentors are. And one of the greatest things that we've learned from them is how that plateaued to where we are today. So it was like the greatest thing that you think you got from working at a place like that.
Yeah, two pretty great takeaways. In addition to all the stuff around general portfolio allocations and management, having a much deeper understanding about equities and options, bonds, everything. To be honest, like that was the greatest bond education of all time. I will say that was something I'll never lose. But I think the two biggest takeaways for me were one, the incredible attention to detail, and I really liked how they rewired the mindset of the analysts and everybody that I was working with, where I think a lot of people focus on the big things, right? We got to nail the big things. Those, goes unsaid. At Goldman, they flipped it and said, hey, if we have a page number that is incorrect, or if there's a footnote that is missing, and we can't handle the small things, like you mentioned, our minimum client size was 10 million liquid that was placed with us. We didn't take any clients lower than that. And most of our clients had a sizable amount higher than that. Our personal book for the advisor that I worked with was $5 billion. And they said, if we mess up on one tiny little thing, how can they trust us to manage tens of millions of dollars? And so everything went from focusing on the big things to focusing on the little things. And I would spend just hours poring over. We had basically a thing that we were taught right in the beginning. If you're ever going to send an Excel sheet to someone, it doesn't matter how many thousands of lines it is, you go through and you have to every single cell in that Excel sheet to make sure that every single one's correct. You triple check it. I think that was a huge learning lesson. It's something that I've imbued into my company. And then the other piece was how to really talk to people who have incredible amounts of wealth.
That's what I was going to ask you. I mean, because it's a totally different animal. Like some people, it's just, they're not easy to crack. I mean, you were dealing with those people. And plus they just think like they belittle you too. No disrespect to some people. Listen, I know a lot of billionaires. No, not really, not too many of them, but I know very well. I mean, that's a different, that's $1,000 million, I tell everyone. So
For sure. And so I think for me, one of the biggest lessons was, so we had the phone on our desk, basically think of us sitting at like 6 desks that are all essentially just smushed together. And my boss has his phone, the other analysts have theirs. And on our phone, you can actually line into other people's conversations. And so if my boss picks up the phone, multi-billion-dollar client is calling, I can put on my headset, mute out, tune into his line, and I can listen to the entire conversation. And that's where I filled pages of notebooks with notes on what the conversations were like. And funny enough, so I noticed that my boss never talked business first. He always, the first thing when they picked up the phone, his go-to was sports. And he knew all of their favorite teams inside and out. And then if they had a different passion, whether it was cooking or whatever it was, he had that locked down. And I remember one of our clients, our second biggest client was and sorry if you hear a little bit of drilling, they're doing some work on my place today, but our second biggest client was just a huge Bengals fan. And I went through after listening to a few conversations and I read every single Wikipedia page that I could find on any Bengals player, their history of the Bengals. And then the next time he called in, I picked up the phone and I started talking to him about the Bengals. This was the year that they had a great start. Andy Dalton was like 9-0. And I started talking to him, and all of a sudden, now when he calls in, he's talking to me for an extra 5 minutes. He's not just saying, hey, can you transfer me over to Steve? And they're actually talking to you. And so I really learned, I think, how to build rapport with people and learning that it was beyond the money. And that's why they held their money with us. They could have their money anyway. They had their money with us because they liked us. Right. I think that was a big piece.
I think that is the big piece of anything else. And anyone, even like when you're losing money for them, and it happens, if they like you, listen, everyone makes mistakes, and so on. But but with that said, you were obviously there for a very short time, and because when I started, I was a stockbroker before I was a trader. I hated it. I really didn't like it. I realized I was just a glorified salesman. I hate to say that. But what ended up happening was I learned something very valuable. The trading department made the most money. And that's why I was always envied what happened at Goldman Sachs. But you were there for a short period of time. And then you went to a small equity firm. But I think what I really want to learn is, and what I love bringing entrepreneurs and people like you is, what made you start Wolf Financial? I mean, how did that come about?
Sure. And I will say, if I was going to pick a short amount of time to be at Goldman, I think I picked the best time. It was end of 2018 into 2019. And so we were coming off of a raging, bull market that hadn't seen any dips into the Trump-China first kind of feud where we had the dip in 2018 going into Christmas with the massive rebound. I don't think I could have picked a better time period. It was, I got to deal with clients freaking out. I got to deal with euphoria. So you really had both sides. As for the Wolf side of things, so this really came to when COVID hit. So I'm working at a private equity firm. COVID hits, and essentially the whole firm pretty much shut down. It was a bit of a disaster. So within the firm, we owned 11 companies, and the 2 that I were staffed on, one of them, which I was very closely working with, was an airline called Silver Airways. People can look them up. If you've ever flown into the Caribbeans or Miami, you've seen them. So we own that airline. And basically, all of our routes got shut down because the U.S. cut off a lot of travel to Caribbean and external islands. And then the second company that I worked with was a restaurant chain in California with 45 locations in California. And they shut down all of our locations as well because of COVID. Wow. And so basically, both businesses come to a standstill. And my entire job became finding PPE loans to keep the companies open and available. And so after about a month of basically spending every day trying to get PPE loans, I was like, all right, I have no idea how long this is going to go for. This could be years. This is not what I want to do long term. Try to beg the government for money to keep companies alive. And I started talking with a few colleagues, and there was this idea going around. So the market had just had that massive pullback, circuit breakers, and we were looking at it, and all the small people around me, and this was the benefit to working with people at a private equity firm, they were all buying. But everyone online on Twitter was freaking out and selling and saying, woe is me, what's happening? And so I'm talking with these guys, and I say, the problem is here, nobody has any idea how to evaluate stocks. And we, had finance degrees, and I was like, I have a finance degree. I graduated summa cum laude with honors distinction, and there's maybe one useful class that they ever taught me about investing. Like, they taught us nothing. And when I was like, okay, we have to teach people how to do this. How are we going to do this? So we started building an app. And the app was basically to simplify research and talk to people. The app over the course of the year evolved, became something that was going to have social features. But as we're building this app, it became clear if we're going to make a successful app, you have to have a user base. And the best way to get a user base is to build an audience on social media and then transfer them over. And also to work with influencers. And so I got tasked with going and building on social media. So I start our Twitter for this app that we're building, and I start growing on Twitter. And after about 6 months, I had a very, very lucky break, or maybe it was, working hard. And I essentially became the first beta tester for Twitter Spaces.
I remember you telling me that.
Yeah, I saw them using the product, and I was enthralled by it. And I was like, I gotta check this out. I went and cold DM'd every single person I could find that worked at Twitter Spaces. And within a week, I was whitelisted. I had access to the product, and I started hosting. I was the first person in finance hosting spaces in the world. And I started doing that, and my account just started soaring, 1,000 followers a week, right? Just growing. And I eventually, several months later, about 6 months later, got an offer from Twitter for a 3-month contract to basically work with them and help build out the product. And I was kind of simultaneously doing this while also working with the team building out this app. But we're slowly realizing, hey, like, this is gonna be a lot of work to build an app like this. There's so much compliance portions, and there are little pieces of the app that we like and investors were interested in. But ultimately, they came to in December of 2021. We split the company into 2 different firms. The people that I've been working with went out to work on the technical side to build in the app and code area. I took over the entire brand of Wolf Financial and converted it into a social media marketing firm and essentially a content creator, and decided, hey, I'm going to go full-time hosting 40 hours a week of Twitter Spaces, and I'm going to see if I can build a company out of this. And that was really kind of the transition and the movement into it. And then kind of the rest is history. We scaled over the last few years. We now have 20 people working for us. We have 15 different accounts that we own. We're doing 1 billion plus impressions a year internally. We manage 100 plus other content creators doing tens of billions of impressions. So it's really continued to grow.
Is it hard to transition from finance in roles into the media brand with you? Did you find out? Or because, there's a lot of people that try to get into the media or social media more part about it, bring the financial or anything,
Well, I think it's really helpful to have expertise in what you're talking about on social media. And even if you don't have expertise necessarily, just having a general understanding and being able to talk the talk is super helpful. So I think that people who have a strong finance background and worked at a major firm, going into the social media world, if that's your goal, and to create financial content, you have a step up, right? You can actually talk from a place of having seen and done these different things versus people who have never had that experience and basically just kind of had the home education, right? And went online and talked about it. So I actually think that it's not a difficult transition. I think it gives you almost a boost.
Well, I was on your show, and and I know you got this great talk show, and you're doing it every day. But there are a lot of people in this industry, and this is why I really envy what you've done, in a short period of time. Everybody's trying to crack the code on social media, and they just still can't do it. how did you crack that code, to get all those followers? Because it's like really, really hard to do it. I mean, everyone's trying to be an influencer, a guru, or, whatever it may be. But like, how did you, what advice could you give somebody, and I want to know more about Wolf Financial, and we'll get into that, but just, just in general, because a lot of people want to learn how to get it into that. How'd you crack the code? What recommendation would you give somebody? Is it just focus on one platform, on multiple platforms? What is it?
Yeah, and what worked for me might not work for everybody else. And obviously, one of the things that was the biggest thing for me, probably in the beginning, was that first mover advantage
Right.
with a early product. And so I do encourage people, if you're trying to make it on social media, being a first mover to new products within social media can be absolutely huge. So when Twitter, started optimizing for live video, which they didn't even have for forever, they just basically had Periscope. If you were the first that said, hey, I'm just going to host live video all day now, every day, and I'm going to jump on that, you had a major advantage, just like I did with Spaces. And that's not going to be the last of it. There's going to be more innovations within social media. And so if you're paying attention, first mover advantage, you're going to succeed there. The other piece within it, and this is the biggest killer of anybody being successful on social media, is consistency. It's just absolutely the biggest killer. I tell everybody, social media is like being in a relationship. If you talk to your wife once a week, how long do you think that she's going to be your wife for? Right? If you talk to social media and you post once a week, you're never going to be successful. There is no relationship there. It doesn't want to give back to you. So social medias are simple. It's an algorithm, and the algorithm incentivizes the people that keep the most other people on the platform. So when I post something, this is how every single platform works. It initially sends it out to a smaller group of people. If that smaller group of people says, hey, this is good, we like this, we engage with it, it goes out to a larger portion, and so on and so forth. And it's just based on, can you retain people on the platform? So the things that I did, for example, going live for 8 to 10 hours a day, are immensely valuable to social media. I'm keeping people on social media for several hours a day. And now social media says, wow, we should tell people, we should push people to follow this person because they are good for us. And so not everybody can afford to be on there. I get it, 7, 8 hours a day, but I believe every single person can post every single day. And then understanding based on the social media what it is. Twitter, you should probably be posting 3, 5, 6 times a day with strong, good content that's giving people insights. And Twitter's all about news. So try to be quick with things, right? Try to give people something they haven't seen before. If you're over on YouTube, maybe it only needs to be once a week or twice a week, but you have to put thought and effort into a high quality video with a strong shot, right? And a message and bringing on big guests. I think it's understanding each of the social medias, but understanding that the algorithm at the basis rewards those who give to it. And it's very difficult if all you're trying to do is take, right? All you're just posting is promotion and, come follow me on this platform or buy my product. That is just taking. That is not giving.
Yeah, you know what? I'm glad that's great advice. And you know what? Fortunately for me, I'm guilty of it. I've been doing this for 35 years, and I wanted to do that, but I kind of felt that to give away that content, obviously it's some value. I mean, I started when YouTube was started coming out, and I mean there are people out there that blew me away on it, and I wish I did what you said a while ago, but we're doing a lot better now on it. But I've done what you've been doing in the past 2 years, and it really does work. You have to be on top of it. And like I said, if anyone's listening that's trying to crack the code on social media, it's one thing. And one thing I do want to tell everyone, because we have a lot, our audience is all different ages that are here, all the way to 90 years old. There's a lot of people that are scared about social media. You know what I mean? On the news. And like with you and Wolf Financial, and your mission on it, why do you feel like some people are scared they use one versus the other? It's because they have to register, because people get hacked and stuff like that. Had there ever been a concern that you could tell people could you advise them regarding about that?
Yeah, absolutely. And I think that every single thing in history, someone's been scared of, right? And then the other people who took proper precautions are less scared of. Yeah, if you're worried about social media getting hacked, I mean, I literally have a security guy that's on call. And so if there's ever any issues, I mean, we actually sat down and basically did 2 hours on call with every single person on my team. We set up YubiKeys, which are basically physical password protection, essentially, where people have to have them inserted into their laptop to be able to log on to company accounts. You can add 2-factor authentication, right? We literally have like this guy on call in case any of our clients get hacked, so we can immediately get into a call and solve it. Pieces like that. So I take security extremely well. I think most people with social media more so value their privacy, more so than worried about getting hacked with pieces like that, which I fully understand. I think that the internet's forever. You want to curate your online, profile to be proper. You always can have concerns. So here's a very realistic concern, right? All these scammers that pretend to be you, right, on social media and then reach out to people and are trying to steal money from them using your image. Like that's a real concern right there. And so I think that for me, as long as you can be safe, right, and make precautions so that you're not going to get hacked, or make precautions to protect your passwords, some of these other items. Be careful about what you're posting online. I know a lot of people, right, they won't post their kids' faces or whatever it is. Like, don't allow the information that you're worried about to make it online. To me, I understand there's still risks. The reward outweighs the risk. And
It
so
does.
that's
I mean, listen, there's risk for everything. It's like I tell people, it's like driving a car. Yeah, it's really risky. You can get killed in it. And you
Yeah.
can see, but you know what? What are you going to do? I mean, if you're going to live that way, it's not going to work. You know, you're not going to. You can't survive in this world. You know, there's things that you have to take a chance on. You just got to be good at it. That's all. But I want to get back to Wolf Financial. So you started Wolf Financial and you did really, really well. I mean, you have really, I envy you, you know, on what you have accomplished in a very short period of time. But your delivery is a lot towards education, towards millions of people. What got you what got you into the space, as in the topics that you're covering, stocks, real estate, crypto? What got you into that space?
Stocks was the natural start for me because that's something that I've been dealing with for a long time. I've been trading / investing in the market for roughly a decade at this point. Obviously, I know you've been in much longer and many others, but for me, I've always loved it and had a strong experience with it. And so stocks were that first love. And then honestly, everything else that we cover, and this is also funny enough, how kind of the business came about, was simply by demand from our audience and from our clients, people asking me, hey, can you do this? Or would you offer this? So eventually, right, I started providing crypto content because all these people wanted crypto content. And then I realized that there was like a huge sect of people that just wanted Bitcoin content, not just crypto. So we made Wolf Bitcoin and Wolf Crypto. And I also realized that there are people that wanted trading versus long-term investing. So I have Wolf Trading and Wolf Financial. So I've really kind of just built segments based off the demand that I get from the audience. And I think that that's how a lot of businesses, great businesses, continue to enhance themselves, right? If you look at like an Apple, if you look at some of these other companies, I really think that they listen to what their company, what their clients want, whether it's a better camera or AirPods or whatever it is, and they start building those products for them. Now, you have to have some type of innovation yourself. It's the famous Henry Ford quote. He says, right, if I asked them what they wanted, they would have told me faster horses. And instead he built the automobile. So you have to have a little bit of innovation, but the idea was there, right? They want to get places faster. Now let me take that concept and let me innovate it to make it something great. And so that's, I think, how we built a lot of different pieces. And then when it comes to Wolf, again, all of our services, I didn't even know that this would be necessarily a marketing firm, an agency, things like that. This happened because people started DMing me and saying, hey, could you help me sell my product? Could you do this for me? And I was like, oh, okay, there's a market for this. People want to buy this product. And then when it came to building an agency, to be honest, I just had more deal flow than I can handle. I was basically an influencer. I called up a friend and said, hey, you've got a big audience. Do you want some of this deal flow? I can't satiate it all. They started working with me and that just flourished 100 plus people. So I feel like a lot of what has happened is just me being an opportunist.
So, and then regarding about when you started doing Wolf, so you have all these separate platforms, right, of talking about certain different things. How'd you build that trust engaging with the retail investor?
I think that the way that I tried to come off was more so by bringing other people to the forefront. So if you look at my first year or two of Spaces, and really this is a time period where I'm still learning heavily. At this point, I had next to no technical analysis skills, right? I was much more of a fundamental guy, but people wanted to hear TA. They wanted to hear more on the trading side. So I was able to use Spaces as a forum to bring people like yourself and others to the forefront who my audience wasn't hearing from. And so I almost became a conduit and really a person who focused on asking better questions than giving better answers. And so that's why I think I built trust with my audience, was not telling them like, hey, I'm the guy who knows everything, but hey, I know a lot of people who I think know these things very well, and I'm going to bring them to you and I'm going to ask them your questions and put it all into a centralized forum so that you can gain access to it. So it almost became a collector of information. And then over time was able to give more of my own thoughts and opinions and really accelerate through. But I think that's how I built trust, was more so by being a conduit to others who they weren't already hearing from.
And that's why, and like I said, you do the same thing like I do also. You got to build that trust. You got to talk to them. You have to be in front of them. I mean, like, I don't know. I mean, I was never a fan of these newsletters that people get because like it's like someone's hiding behind a computer and stuff like
Right.
that. But being right in front of them and calling you out on it, I think it builds the trust. And listen, we make mistakes. We're wrong sometimes. And you know
Many
what?
times.
Being wrong is okay as long as you don't do it again, right? You know,
Yeah.
yeah. Now, regarding about the future in the financial education, where do you see in the next 5 years from where you started? You know, I mean, like, where do you see us going? AI has been obviously stepping in this place. It's replacing people. Like, do they need us anymore? I mean, how do you evaluate and what you're seeing in the future?
I'm super curious on the AI portion because right now, so I'm a huge podcast guy. I love listening to podcasts, and there's something about that human banter back and forth that really is enjoyable to listen to and get takeaways from in that manner. But I also have been watching more AI content lately, and some of the videos that they make, the more comedic style videos, I find hilarious. So I do wonder if AI could get to the point where it's just having these types of bantering conversations and really organic. So I'm actually pretty intrigued, and I think it's more likely than people are giving it credit for that people could start just listening to full-on AI podcasts and education and really not even know the difference in many times. So I think that that's one area right there. But probably the bigger thing that I think is going to be a bigger focus on moving forward is video. I think that video podcasts, video interfacing, live streams are just going to continue to really ramp up. If you look at some of the numbers right now on social media and specifically on YouTube, Twitter, areas like that, I think that we're seeing pretty much the highest numbers ever of viewers, subscribers, watchers, right? Like you look across the board, it's just continuing to scale there. People really enjoy that video medium, and more people now have physical devices, right, that they can watch it on in high quality more than ever. So I think that that's a big area. And then in regards to the market, ETFs, funny enough, I think are having their moment. I think this is like the next couple of years, that's going to be all the rage, or maybe even much farther than that for investors, both because now you can trade them, right, with leverage ETFs. You can get income from them, other areas like that. There's more ETFs than stocks for the first time in history. So I think there's actually going to be a huge ETF revolution here as well.
You know, it's funny you bring that up. I was at Canada, and because Canadians love dividend plays up there, and I started trading a lot of them. A lot of them some people don't know about these high yield dividends, and they pay you weekly. You know, and it's funny. I always joke around with my traders in the room. I'm like we'll trade TSYY or TSLY, whatever it may
Yeah.
be, 1,000 shares. I mean, the stock is not that expensive. These ETFs, I mean, it took really big hits from where they are. They've been holding here for several months now, and like they're only like between $9, $15, $20. They're paying you like 200 a week, 300 a week, you know, on 1,000 shares, you know, and it's cheaper to buy that and buy a house, getting paid
Yeah.
rent from someone, not dealing with it, you know. So I mean, I know that everyone always liked like my thing is like I don't know about how you feel about options, but like I only found that only people that really make money in options, the people who sell options because they're making the
Mm.
premiums on it. You know, it's like they're just renting out their stock, but you have to own it. This is like the same thing with ETFs. So I'm glad you brought that up because I think a lot of people are not taking advantage of that a little bit more. They're always trying to try to hit that home run with that stock and stuff like that. But yeah, I think the ETFs. I mean, it's crazy because me being in the stock business, companies love to come out with IPOs because the exchanges, the way they make their money is companies be public, so I guess they ran out of companies go public and they just keep making ETFs after ETFs of these stocks. I mean, some people don't even know this, but like Tesla, I think is in 300 ETFs, not
Wow.
including their own ETFs, betting against it to go down, betting to go up in on the dividend. It's just crazy. Have you been talking a lot about that more on your shows?
Well, absolutely. So I'm pretty sure that at this point, my biggest portion of my clientele are ETFs. They're
Wow.
really wanting to get in front of retail. In fact, I don't know if you heard of the publication Ignites.
Yes. Yes.
Yeah,
Very little.
big publication in the social media. Well, I don't know in the ETF world. I guess I know this mostly because a lot of my contacts have gone ahead and messaged me about it. But I'll pull this up actually on screen. I just have to
Yeah.
log
Why don't you
into
show
it.
that? Let's bring that up.
Yeah, let me pull that up in 1 second. All right, just verifying this. Okay, so I'm gonna share this tab real quick. People can see this.
No.
There
There
we
you
go.
go.
All right, so this was trending nights a couple days ago. So one of my friends works at State Street, actually sent this to me and said, congrats, you're in this. And then also the director of ETFs for the New York Stock Exchange messaged me and was like, congrats, I saw you were in this. So that's how I knew that this was a big deal. But this came out on Ignites. They talked about basically shops are now using Reddit, TikTok, influencers to push single stock funds, really this movement in the ETF world. And it's not just single stock funds, to be honest. It's anything that's, in my opinion, leverage, thematic, or income has become very popular here. But you can see, I mean, tons of these different companies. So they named 3 of my clients actually were quoted inside of here. They had Direction talking about how they're utilizing social media, X, Reddit, and YouTube. They had down here, Crane Shares talked about it, and Crane Shares mentioned right here that they've worked with, obviously, the Animal Spirits podcast, huge podcast with Michael Batnick, Ben Carlson, and also working with us here, digital marketing agency. We're getting them tens of thousands of people that are seeing these live
Really cool.
posts, webinars. Yeah, and then another big client of mine too, Leverage Shares, Themes ETFs, talking about how them as well, right? They're using Wolf Financial here to do promotion. So you can see it's not just happening; it's major shops. Some of them with direction of 60 billion in AUM, talking about how they're using social media influencers to market and talk about their ETFs. So it's become a huge part of our business and a huge part of the conversation.
So how would you, with all that, all that technology and all that, data you're giving, if somebody was looking to get someone to get into this market and stuff like that, or in the financial media, what would you recommend them to do?
If they're looking to become a social media influencer, if they're
No. I'm just saying to try to crack, getting into the financial markets. What you've done, what would you recommend to do?
I want to make sure I fully understand the question. Is this as an ETF firm? Like who's the person here? Just the average retail investor?
Right, yeah, the average retailer.
Okay. And they want to go ahead. Oh, that's cool. You could see someone scan the QR code. That's nice. They want to, more people, by the way, scan the QR code, free live workshop, top corner. So more retail investors who want to just get into the market and be invested in the market. That's the question?
Yeah.
Okay. I mean, well, first off, ETFs, right? Great place to start. Broad-based index funds, ETFs. I love the portfolio, kind of that satellite-based portfolio where you have your bulk of your portfolio, 60, 70% of it in broad-based index funds. Take a look at the S&P 500, QQQ, other areas like this, your retirement style funds, how well they've performed continuously. Yeah, 2 more right there. How well they've performed continuously over time. I think that's a great base of the portfolio. I personally like accentuating it with assets like gold, like Bitcoin, right, which can benefit from the devaluation of the dollar because we know that the Fed is not going to stop printing. So to me, that's a perfect area. And then taking that extra 20, 25% of your portfolio, and that's where you're using it for, your single stock, more volatile plays like Tesla and Hood and Palantir. You're playing options perhaps in some of these items. I have some gold plays on right now, right? Maybe you're dabbling in a couple different pieces, but that to me is where I find a pretty strong basis. And it depends, to be honest, for that last piece. If you're the person who has the time to get involved in the market with options, with stocks like that, maybe it's not your thing. Maybe you don't have the time to pay attention. If you don't have time to do homework, I personally wouldn't trade options. And if you don't have enough capital, it's difficult to sell options. So maybe that's not your game. But more so, maybe it's having your broad-based index funds and then some of those single stocks that you're very passionate about and a believer in, and adding those to the portfolio. And then if you're a day trader, I'd probably just send them your way.
You said to me. Listen, day trading's been a lot of fun lately. It's been crazy with all the volatility been happening. Which I want to ask you, where do you see this market going to? By the way, I mean you're all over the place. You're hitting all these people. I mean, like yesterday we had a correction. What's going on today? We're flat. We're down we're up 60 points. Yeah. There was a big article written up that a lot of the brokerage for the bank CEOs think that all the fabulous sevens are way overpriced and stuff like that. What are you telling everyone? What's going on? Should they hold on?
Yeah, probably the saying that I say the most when it comes to the markets is all-time highs are not bearish. That's really the kind of thing I try to push through, right? We're continuously pushing all-time highs. There's a reason for it in this market. We've had, a lot of different massive moves in the market recently, but we haven't truly hit what I believe is going to be that age of automation. And the age of automation is going to be a very interesting one because companies are going to have a lot of layoffs and the economy is going to go through a weird period, right? Less people working, but actually higher output and more efficiency in these companies. And so to me, it's the perfect time to be placing those bets on the United States, right? And to be playing something along the lines of the SP 500. It's essentially right now a giant casino, and you get to be the house, right?
Right.
In this move upwards. And so to me, I talked about this at the Money Show, actually, maybe a year ago, maybe a little bit less, maybe it was February, something along those lines. But I spoke with Mike and I was talking about AI. And I said, the reason that I'm so bullish on AI is, to me, the most valuable commodity in the world is time. And the number one saver that I can predict over the next decade of time is going to be artificial intelligence. And it's going to save companies time. And then that time is going to roll down and save, costs, labor, all these other pieces. And so you just can't discount something like that. And right now, I would say that, maybe people should have bigger concerns if we couldn't see the numbers, but we can see the numbers coming out from these earnings calls and the growth of NVIDIA. But NVIDIA and other companies, they're doing more revenue than ever. They have better margins than ever. And they're telling us we only have 25% of the necessary supply for the demand right now. Demand is outpacing what we can even offer. And so maybe if they were at 75% or something like that, but 25%, I think that there is opportunity in this market. So you're going to see pullbacks and shakeouts. Like, these are healthy things. I'm sure you talk about, moving averages, right? Yesterday was such a textbook pullback to the 21 SMA on the SP 500. It's beautiful. Like, that's what you want. You don't want to run a million miles above the 21 SMA, which we were pretty significantly above it. I mean, we were sitting at 688. The 21 SMA was at 670. We pulled right back to it. You can see we touched it yesterday. We closed on top of it. And then from there, we immediately moved back up. That's what you want to have happen. The 50-day SMA has worked perfectly. People can look back at that in early October, October 9th, October 16th, some of these different moves. Maybe I should be sharing my screen. Maybe that makes it easier for people to see
Let's
this.
see a little bit. And by the way, as everyone's listening in, I see some people scanning. We're going to have a workshop. If anybody wants to get a recording of this video and the highlights, I'm just going to post up this little QR code really quick so everyone just could scan it, and it's on the top left-hand corner. We have a free, we'll have that sent over to you. So I'll put it on the top left-hand corner. Just have your phone and scan it, just so everybody know.
Cool. People can ignore some of these blue lines, but really the key things that are moving on here, there's a pink line that you can see running through that is a 21-day simple moving average. And then there is a red line that moves through here that is a 50-day simple moving average. The green line down here is your 200, and the orange line is your 200 EMA. I've got seasonality on the right as well for the last 4 years. I try to take it since after COVID for the most part. I guess I could even go out 5 years at this point. But for me, this is what you want to look at. Look at how cleanly we've traded the 21 SMA, where we continuously come back to it and then the next move up, come back to it, 1 day break, next move up. Sometimes you have perfect taps like right here. This is exactly what I could see happening on something right here, right? If we were to have this move that's right here, and then you can see we went essentially on this move roughly, all right, 1 second. We went roughly, all right, it's doing it tiny, but it's like 1% basically above there. So now if we were to have something along those lines, you could basically see SPY move back up, right? That'd be like a 2.5% move from this point. So I think that you have some good price action there. When we've had bigger fears, like, that big day drop, you've come down to the 50. We haven't really broken the 50, in my opinion, because we essentially really closed above it on all of these days. We haven't truly broken the 50 since all the way back in February. So that would be a big downturn. So I think that's where you can start getting a little bit more fearful in these markets is, hey, we've broken below the 50. And then, of course, a break of the 200 SMA is always awful, especially when you have a failed retest and then you have something like this with some of those pieces. But yeah, I think that just kind of looking at moving averages, I don't know if you know Stock Talk Weekly, we do a lot of shows together. There's an afternoon show that we do called Stocks on Spaces every Monday through Thursday, 3 to 5 p.m. Eastern. But he's up like 300% this year, and he posts his returns every single week. And people are asking like, oh, like, what's your strategy? He goes, I literally just look at volume and moving averages because people are making it too complicated. He's an active trader. So I think that you can really slow it down a bit. And then you can take that and just, apply that over to a lot of your favorite names. Like, that's why I love Tesla right now. Look at this, right? We're way above the 21 SMA. It's got to catch up. Instead of
I own a shitload of it but I own the ETFs. I own like TSLL, TSLY, all of them.
Exactly. So this is like a beautiful play right here. We didn't even touch the 50. It wouldn't even be bad if we kept on traversing till the 50 comes up and then we get a pop. And, so on and so forth. Robinhood, 21 SMA, 50 right here. Respect the 50 right here. Respect the 50 right here.
After the close.
Just a lot of these names really working out well right now. Obviously, earnings right here. People can see that line is earnings. So that's where I think that, you can, if you're taking more of a day-to-day approach to the market, just pay attention to those things. But in the bigger picture, right, you just zoom out and you see, hey, we've rebounded from world wars, from tariff wars, all these different pieces. Like, what is it right now that is giving people the fear? Is it overvaluation? I think that you have to take into effect with the overvaluation that we have continued to just print money at a rapid pace, and that it's not going to stop at any point, and just the more printing of money raises assets. And then we're in the age of automation. And so I don't claim to be the AI expert. I just simply understand what's happening on a daily basis, right? Like, things are happening that are saving me time. I went in the other day. So I had a client that really wanted me to build out. I'm very familiar with the compliance side of things these days, especially working with publicly traded clients. But a client was like, I want very specific legal wording from SEC and FINRA. Like, give me, like, pages more so than what you've already provided, with the proof that, everything you're doing is compliant and pieces like this. I'm like, okay. I go into Perplexity, right? And I say, hey, Perplexity, like, here's my current legal framework. Here's all the pieces. I want you to go through and search every single SEC filing and every single FINRA filing. And I want you to build, like, the full thesis that, supports everything that I'm doing. And it went through and it pulled, like, specific quotes and legal filings and case law, and it put it all together. It would have taken me like 100 hours, and it did it in literally 2 minutes, maybe less.
Crazy?
So I look at that and I'm like, all right, how can people not be bullish on what's going to happen? You're going to have solo entrepreneurs being able to build billion-dollar companies because their entire team is robots that work 24/7 and cost them 10% of what somebody else would have. It's just mind-blowing.
I got to tell you something really crazy, Gav. So I did a short video on Monday on Palantir. You got to watch it. I do a lot of shorts. And I asked AI, I said, what is Palantir's earnings going to be? And it told me. And I said, wait, what earnings? Are these today's earnings before the close was at the close? He goes, yes, those are today's earnings. It said it was supposed to be 17 cents that they were going to do it. And I'm like, how do you know the earnings? The earnings didn't come out yet. He goes, and then it backstepped and lied. He goes,
Yeah.
oops, you're right. It is not today. So I'm like, are you telling me something, inside information that I don't know? So that's, I mean, and then I'm like, then I said, I made a second video on, I said, let's go back and check it. So this is where I get a little nervous on AI, because, like, how powerful is it? Like, you just asked it to search. It is so damn quick and so damn fast. Do you think it could hack?
Yeah, absolutely. So I actually will tell you, this is something that I learned recently. There is a division at Meta, and they've built, working with some engineers, one of the most powerful hacking bots in the world. And
Wow.
this thing basically can try, millions of combinations a day. It can hack you through every single different type of site. And now companies, people don't realize how many areas of revenue. Companies actually pay Meta to have this bot hack their platform and then provide all of the detailed feedback on what they need to fix so that they can't get hacked moving forward. So it's just like, yeah, there's literally a whole market out there for that already.
So do you really think that ChatGPT told me what the real earnings were? Because it did beat earnings, but it wasn't 17 cents. It was like 14 cents.
It has what people call hallucinations, right? Which is why I think you have to double check it. So, like, when ChatGPT provided to me, like, FINRA and SEC pieces, I asked for sources, right? And I said, give me all the links. And then I went through the links and I read the articles myself.
Read the sources, okay.
And I made sure that it all worked out. So if it's saying, like, here's earnings, I'd be like, what's your source, right? So I think that you just have to, like, double check it. But of course, it's still saving you so many hours. Double checking things. It's basically right now the equivalent of having like a super powered analyst, right? Think about, you have like an analyst, and that analyst is awesome. And they do, all the grunt work for you, but, like, you still double check the analyst's work at the end of the day before you send it to the client. And so it's right now, it's like a super powered analyst.
Yeah. I'm going to be at, it was pretty crazy last year, and we're almost out of time, everyone. And, we're going to, but just a couple last questions I want to ask out. But, I was at, I don't know if you're going to be there, but I was invited to go to the trade station Crossroads at the end of this month. And I was there last year, and they had this guy, I had him on my podcast, who was MJ. He was one of the top, I don't know if you know who I'm talking about, but he is one of the top engineers at Microsoft.
Oh, nice.
And that's when I really just opened my eyes, just freaked me out, the stuff he was telling me what ChatGPT is. And he's like, just don't get scared. And, like, you're going to start using it. And even for people that are here older, don't be scared. I mean, it could save you so much time. I mean, like, look up your drugs and see what it does and if it's good for you. I mean, the scary thing, it knows everything about you personally. I mean, if you ask anything about any one of us, it'll come up with it. It does it And it's like they said, it might even cure cancer. They said. I mean, it's that smart, you know. But the crazy thing that he told me, Gab, he said, "You think this great now?" He says, "This technology's been around for 50 years. It's just now it's just starting to take over, But now we're starting to really get smart enough to use it. But I can't wait to go back because he's going to be doing another speaking, and I'm going to have him back on here, and you definitely should have him on your show. But one thing before we go, last thing I think everybody here wants to know, Gab, about Wolf Financial. Any big plans, innovations in Horizon with Wolf Financial you got going on?
Yes, some big ones. Can't share all the details just yet, but there's
Come
some
on.
internal products that we're working on, which I'm excited for people to be able to see. So there may be some platforms coming out underneath the Wolf brand that would be very helpful for retail investors to be able to utilize on a daily basis, and they are going to definitely involve AI as well. So I will put that out there, so people should check them out. And then number two, we're making just a huge push right now into more high quality shows, bigger speakers. I'm doing a show on Friday with Amit from Amit is Investing, which I think people should tune into. He's a very big personality on social media. So yes, tons of things that are coming. By the way, one more quick comment. I think the chat was right. 17 cents was likely the projection for Palantir, the expectation, and it probably pulled the expectation and fed it to you as the reality, because that's where some of the hallucinations still happen within those pieces. And then, yeah, the other guy you're talking to is right. When people talk about like the godfathers of AI, like these are guys in the 80s, 70s, like working on this stuff. And now it's really taken over because LLMs have become something that retail is able to utilize. And that's been our first introduction. But LLMs are just a start. The big movement here is going to be physical AI. And that is going to be integration with robots, computers, machinery, everything along those lines. That's when it's almost like you have something that's a brain, but doesn't have a body right now. You give a brain a body and the entire world changes.
It does. It does. Well, listen, Gab, thanks for coming. And it's been great having you here. And congratulations on Wolf Financial. You're doing a great job. Keep up the good work. And your staff is unbelievable. And look forward to having you back again and being on your show. So everyone, here's a QR code. If anybody wants to learn more about Gab's or we'll post up even the website up to have Gab. Maybe you could show them a little bit how to get to the website and stuff like that.
Yeah.
Put up there.
Yeah, absolutely. I mean, I'll just do that real quick before you close out. If you want to just pull up the screen that's being shared from the back end. They're on. I have it screen shared right now. There we go. Perfect. Yeah, I encourage everybody to check out wolf.financial, just www.wolf.financial, no .com, just .financial. We just redid this. I think it looks beautiful. We've got all of our, different clients and people that we work with. I'm actually repping NYSC today on here.
Nice.
You've got, marketing and some of the different pieces, some of our stats. So I encourage everybody to check it out. It's got a lot of great information on us, a whole about page that we just redid, some of my founding stories and details, the team. So yeah, definitely encourage people to go ahead and check that out. Just wolf.financial.
One last question before you go. Where'd the word wolf come from? That's that one.
Yes, absolutely. So wolf, I feel like there's a few connotations to it, but the acronym that we've always had more behind the scenes is the World of Learning Finance.
Oh, okay.
And so that's why it's Wolf as a general. And then there's sub brands, Wolf Bitcoin, Wolf Crypto, Wolf Financial, Wolf Invest, all the different things. So it's World of Learning Finance. But then for me, I always wanted it to be some type of animal. I love the idea of, having an animal, a mascot, pieces like that. Wolves, notorious for two different things. One, a wolf, there's kind of this misconception that they're lone wolves. But wolves are actually one of the most notorious pack animals in the world, always travel in packs. And I think investors should travel in packs as well and invest together. And you get that group, benefit, right, of everybody's information. And then number two, it's a little bit of an equality piece. So there's not a lot of animals in the world that can do this or say this, but in wolf packs, there are two alphas always. There's an alpha male and an alpha female. It's pretty much the only animal that has two alphas, one of each sex, basically leading.
And everyone's betas.
And I thought that was pretty great as well.
That's awesome. That's great. Well, now everybody knows the real truth about Wolf Financial. So we got the word from. So that's awesome. Thanks a lot, Gab. And everyone, like I said, feel free to register, and we'll have some shorts going out. Make sure you subscribe to the channel, like us, friend us, leave a comment. We'll get back to you. Gab, enjoy the rest of your week, and we'll look for having you back. All right. Thanks for coming.
Thank you. Appreciate it.